Norway is one of the richest countries in the world. Low debt, massive savings, political stability. On the surface, it looks like the kind of place where investing should be a no-brainer. But here's the real question. Does a strong country automatically mean strong investment returns right now? Because when it comes to Norway, the things that make it look safe can actually work against returns, while the real opportunity sits in places most investors don't think about. By the end of this video, you'll know whether Norway actually makes sense for your portfolio, or whether it's better admired from a distance. This isn't investment advice. It's a big picture breakdown to help you think clearly about the trade-offs. And make sure you stay until the end, because the currency side of this matters way more than people realize. Let's start with the basics. Norway has a small population, but one of the highest GDPs per capita in the world. Its economy is built around energy, exports, and extremely strong public finances. Unlike many countries, Norway consistently runs budget surpluses and has very low government debt. And on top of that, it owns one of the largest sovereign wealth funds on the planet, worth well over $1 trillion, invested across global stocks, bonds, and real assets. That fund alone gives Norway a level of financial security that most countries can only dream of. So from a stability perspective, Norway is about as solid as it gets. But here's where investors need to slow down. Stability at the country level does not automatically translate into high returns in the stock market. Norway's stock market is relatively small and highly concentrated. A large share of it is made up of energy companies, banks, shipping firms, and industrials. That means when oil prices move, Norway tends to move with them. So if you're thinking about Norway as a way to diversify away from global markets, that assumption doesn't really hold. You're not buying a broad, balanced economy. You're making a very specific bet. And that bet revolves heavily around energy. Oil and gas still play a huge role in Norway's economy. The upside is clear. Norwegian energy companies tend to be profitable, well-regulated, and politically supported. Cash flows are strong, and the country has managed its resources far better than most. But the downside is long-term pressure. Climate policy, global decarbonization efforts, and changing energy demand all introduce uncertainty. Even though Norway is investing aggressively in renewables, the transition takes time, and energy revenues still matter today. So when you invest in Norway, you're effectively saying that energy remains relevant and profitable, longer than the market might currently expect. Now let's talk about something that many investors completely overlook: the currency. If you're investing in Norway from outside the country, you're exposed to the Norwegian krone. And the krone is not a stable currency in the way people assume. It's closely tied to oil prices, sensitive to global risk sentiment, and can be surprisingly volatile. That means even if Norwegian stocks perform well in local terms, a weakening krone can wipe out those gains when converted back into dollars or euros. At the same time, if the krone rebounds, it can significantly boost returns. So you're not just investing in companies, you're investing in a currency and a commodity cycle at the same time. This is where Norway becomes more interesting, but also more risky. So who does investing in Norway actually make sense for? Norway can work if you want targeted exposure to energy and commodities, value political and institutional stability, and are comfortable with currency swings. It can make sense as a tactical allocation if you believe oil demand stays resilient this decade and that the krone is undervalued. But Norway is probably not ideal if you're looking for high-growth tech exposure, broad diversification, or a simple hands-off investment. For many people, global or regional ETFs already provide enough indirect exposure without taking on extra currency risk. So is now a good time to invest in Norway? The honest answer is that Norway isn't a safe bet, and it isn't a growth play. It's a specific bet. A bet on energy, currency movements, and long-term stability. For the right investor, at the right time, that can make sense. For everyone else, Norway may be better viewed as a complement rather than a core holding. If you found this breakdown useful, hit like, subscribe, and let me know in the comments. Would you invest in Norway right now, and why?